Good afternoon, traders. It is Friday, September 10th, 2021, and the U.S. stock market is closed. We're having terrible days, and then along comes Freaky Friday, and the terrible days become nightmares, and that's basically what happened today. Pretty terrible. The Dow had a terrible day, too. You're looking at um, the chart here. Dow opened up, way up here, and by the end of the day, it's closing almost at its low down here. The range between this high point and low point today is about 500 points. That's this is about the worst uh, chart I've seen of the Dow. I mean, this is in a long time. It has these down days, have had these down days before, but um, they're just mild little pullbacks. But this looks like more than a mild little pullback. This looks like real sickness in the Dow. And whether it had anything to do with what happened to us, I don't know. Hard to say because we lose money when the Dow goes up as well as when it goes down. But we had a terrible day today. We had 14 positions coming in. We were positive $3,000 on the close yesterday on those 14 positions, and we closed those out with negative over $9,000. So we saw a swing difference there of over $11,000. Uh, so not good. Not good at all. And then to make things worse, we got into five new positions. None of them were positive. All five were negative, and we ended up closing out, or negative, not closing out, but carrying negative over $11,000 and losing trades over the weekend. And as I say, no winners in there, all losers. So that's just terrible. I'm not going to tell you I don't have anything to show you. I'm going to show you actually four stocks and talk a little bit about what's going on. If I didn't say the Dow closed officially down 272 points, but as I say, it was a range of 500 points from the high to the low. So quite a reversal there. Okay, let's look at this first one here. This was definitely our best trade. This is CEI, which is Camber Energy Incorporated, and this thing had this pop up in the middle of the day. Yesterday we grabbed it. It kept going, and then it popped up some more this morning, and we got out on that pop up, and we took $16,500 out of Camber Energy Incorporated. This is an outlier, and I can't believe that on a day that we get an outlier with over $16,000 in profits, that we should have a losing day, not only a losing day, but an absolutely horrible day. And that just illustrates how horrible it was, because this $16,000 profit didn't do us any good at all today. It was just wiped out by horrible, horrible other trades. So let's look at one of those here. This is VRPX, which is VRPX Pharmaceuticals Incorporated. And VRPX Pharmaceuticals, we bought this yesterday almost at the high tick of the day. It did close against us, but not too terrible there. But this then down really hard here, and we ended up, that cost us $10,000 in VRPX pharmaceuticals, and it kept going. If we had held this to the end, and fortunately we did not, we'd be down like $21,000 in this stock. Uh, like I say, these breakouts don't seem to mean anything anymore. Yeah, we got a breakout here, and look what happened. We were just absolutely killed. And then I'll show you another disappointment here. Oh, I didn't. Okay, that's okay. All right, this is IMPL, which is IMPL Neural Pharma Incorporated. IMPL Neural Pharma Incorporated. We bought this yesterday at the beginning of the day. It closed beautifully here, and we were up $7,800 on the close yesterday. I showed this to you yesterday. I thought, hey, this is a great trade. This is the way it's supposed to go. And then look what happens today. It opens way down there. We get out down here, and so we saw $7.8 thousand go to negative 3,600. So we saw a loss here of about $11,000 from where we were closed yesterday to where we got out today. $11,000 just one stock, and it looked like a great trade, but it's just nothing's working, and that seems to be the way it's going. And finally, I'll show you another one here. This is Play, Play, which is a Dave and Buster's Entertainment Incorporated. I'm assuming that has something to do with gambling. But anyway, we bought this yesterday, midday, and it actually closed against us. And then this morning, this huge gap up. And up here on top, this stock is worth about $9,000 to us. And we see $9,000 melt down to $1,300 when we got out. So, we're seeing like another, almost an $8,000 give that back there. People, this is just, we normally would have gotten out of this somewhat sooner, but when we get a big gap up like this, we stay in it. We stay in it in anticipation that this big gap means something. It means strength. And the way stocks have been for the last 6 months almost, this doesn't mean strength. This means the hedge fund managers come in and they short it. That's all this means. It's the whack-a-mole syndrome. If it goes up, you take it down. And so we've seen this pattern over and over again where we have a rising market, but all the money is being made on the short side. And so that's why we're playing the long side. That's all we play is the long side. We got this, what appears to be a roaring bull market, and we're just getting killed day after day after day because the money is being made on the short side, and it's shorting our positions and all the traders out there that are doing similar things to what we're doing. So our price patterns are simply totally out of sync with what's going on in the stock market. Now, you think, well, should we just fold our tents and go home and forget about this? Well, no, I'm not going to do this. I'm going to tell you that even though this is extremely discouraging, even and particularly at a day like today, when we've just seen all these profits melt down to nothing, these price patterns cannot continue. You know, more and more people are going to see this, and they're going to think, they're going to figure out, hey, the money is going to be made shorting. The money is going to be made shorting. And you get more and more people shorting these stocks, and then the worm turns, and those people get killed. Shorting is, believe me, I've done tons of shorting myself. I know all about it. It's a very risky business. Just ask the hedge fund managers that were driven out of business as a result of the GameStop fiasco, and to a lesser extent AMC Entertainment. They all got killed with those things, and that just illustrates the vulnerability of shorting stocks like this. And hey, it's going to change. I know it's going to change, but in the meantime, until it changes, it is really frustrating. I know. And all I can tell you is, cut back a little. I've cut back, way back with my managed positions, um, but I don't stop trading because I got to be in touch with these stocks every day to understand what's going on. But things will turn around. It just won't keep up this way. It can't. These short sellers are in the end going to get killed, but they're being very persistent right now, and you have a combination of cooperative brokers who, by the way, lend your money to these hedge fund managers so they can short your positions. Don't know if you know that, but it's true. And then you have lax government regulation, and it just adds up to a mess like we've seen the last 6 months ago or so. But it can't. It just won't keep going. I guarantee it won't keep going. So, yeah. Hey, listen, guys. Have a great weekend. Trader Bob will be back here on Monday again, trading as usual.